Everybody, welcome to the show. It is May 30th, 2024, and this is the Morning Monster. Got the, I don't know what the flavor it is. It's like, I guess it's blue raspberry-ish kind of flavor, but it's, I don't know. It's a berry flavor. Anyway, welcome everybody to the show. Infinity, Eric, Larry, Kevin, Ed, Arturo, Wade, Robert, Nikki, Kenneth, Roland, Rex, Francois, Rob, Ted, Alan, Brian, Jeremy, Carrie, Svenborn, Don, Andreas. Welcome to the show. And if you want to be one of these chatters, jump on the stream, say hello, whatever it is. Click the button over here where the monster can is. Oh, need to push it back over just a hair. And yeah, so click the button right down here. Be a subscriber on the channel. A few seconds later, you can chat and say, hey, what's up? What's up, everybody? Anyway, morning, Joseph, Kenny, Craig. Welcome, everybody. And look at that. Popping on GDP right there. I like it. I like it. So far, I thought I had a Chrome extension installed to let me draw, but I don't see it at the moment. Hold on a second. Let me see if I can find my Chrome extensions. There it is. Manage extensions. And well, that's cool. How do you sync them? Well, son of the biscuit. I don't even see the syncing button. Cool. Love it. And yeah, I guess I'll have to do that later. Anyway, sorry for the blank. Anyway, so ES right here, breaking through on the GDP. And before we get into anything, all trading involves substantial risk of loss. Past performance not necessarily indicative of future results. That means I may never get it right again. Like, just because I make big, bold predictions and they come true, I get lucky on those, but I may not get it right again, ever. And that would kind of suck, but I've been at this a long time, and if I just quit getting it right after getting it wrong for so many years and then getting it right and then go back to being wrong again, that would kind of be lame. But this presentation is intended to be informational, educational, fun, and entertaining. Is not a recommendation to buy or sell anything from anybody at all. So don't buy stocks, don't buy options, don't buy Forex, don't buy futures, don't buy cryptos, don't buy bonds, don't buy treasuries, don't long them, don't short them, don't trade them, don't buy stuff from me if you don't trust me. And if you desire that personal financial advice, you're like, JT, what do I got to do? It's not what I do, all right? Don't ask me, please. You got to hire and consult a financial advisor and make sure you trust them. And MD, I don't speak that language, but hey, welcome to the show. All right, so we had GDP coming in hot this morning. It wasn't hot, it was in line. Preliminary, we were expecting a 1.2, got a 1.3. And I think it was Bloomberg or maybe it was Wall Street Journal said that we were expecting 1.3 and got 1.3. So pretty much in line. Right on the, pretty much what I thought yesterday when I was talking about this is we're going to pretty much come in line because they got to keep the narrative going, right? I mean, that's the bottom line here. We got to keep the narrative going. So they don't miss it by much usually on these estimates. So that came in right on the money, pretty much right on the money, honey. And yeah. So if you take out government spending, though, this has been negative for a long time and it's still negative. Services, Texas services, flash services, whatever it was from Texas last week came in, or maybe it's Monday, Tuesday, I don't know, whichever day it was that released it. It's all a blur with this holiday week. And that kept shrinking. We've had 24 months straight of shrinking. Let me see if I can pull it out of the... I bet I posted it to Termite Trading Lab group. Hold on one second. That's my VIP group. That's with me, that has access to everything I do. That's something that... Yeah, I did. It's Bloomberg right here. Let's see. Check this out right here. And I'm probably in the way, so I'll put myself on the other side. Right here. You go. Oh, off the screen just a hair. Pull it over, pull it over, pull it over. There you go. And man, that's off the screen both ways. Let's make it a little smaller. There we go. For 24 straight months, the Texas services sector has been in a contraction below zero. That means shrinking. Right? And May's print was worse than expected. Context for the Great Recession of 08-09. We also saw 24 straight months of negative prints. So despite this growing GDP and expanding GDP, Texas services, this is plumbers and HVAC people and massage people and things that do services for people, which is we're kind of a service economy, right? Services shrinking for 24 months in Texas. Texas, you may be like, why does Texas matter? Houston is basically one of the big three economies. You got New York, you got California, you got Texas. Like that's the big three. Even though it seems like Florida would be big, it's not as big as there's more people that live in New York, New York, California, and Texas. And it's like you look at YouTube traffic, New York, California, Texas. That's usually where you get the big chunks of traffic. So this not too good right here. Indicative that something's shaking out. Now we didn't get this big down spike. So is this the prelude to a bigger flush out that may occur? There's this little piece right here that's just a screenshot actually went on to quote several of the interviewees, and they said that they expect to close shop and put everybody out in the unemployment line in the next several months if things don't drastically improve, which they're not gonna drastically improve. So services in Texas having a hard time. This is your concrete repair guys, your construction guy, any services, construction services, plumbers, haircut service, getting your hair did, salons, anything that's a service. So not too great here. Problem, another piece of the puzzle, if you will. So even though the GDP came in growing 24 months. So basically since right here, all the way out to here, that's still been shrinking on the services for Texas right there. Not the recovery that's shown up right here. This is government spending basically that's showing up in the GDP. And the real economy, this is what we all feel is right there. Yep. Anyway. All right. Tomorrow, we have PCE. Say the letters in the right order. PCE, personal consumer expenditures. Expected at 0.3. I wish it would give me the year over year instead of the month over month. Month over month, we're expecting at 0.3. I kind of think this might come in hot. Honestly, CPI came in hot, and PCE may come in hotter than expected. Now, month over month, it may come in at 0.3, but the year over year may come in hot. So, what does that do? It likely causes a knee-jerk reaction in the market. So we could get a pullback even if we rally today, which so far, I started out on this chart rallying off the lows. 52.50 was where I said we needed to hold, and look right there. Look where the low was. You can't make this stuff up. I mean, it's kind of crazy. Kind of crazy sometimes how this works. Maybe be like, JT, how do you do it? I don't know. Get lucky. And I was looking for the price flag. Probably annotate. Yeah, right there. That right there. Look at that. Look at that. Then nuts. 52.50. Gotta hold that. So Gotta hold it. Can't. If we get below it very much, get any, a spike, one of these, where we go down like this and then come right back up, that's okay. It's sustained price action down in there. So this bounce right here could be indicative that we're going on up. We held the level we got to hold so far. So far, so good. All right. Any questions? Let me know in the chat. It's interesting. Interesting price action. When we hold the levels we got to hold, that can be indicative that we're going on up. Jump back to the daily. Zoomer in, zoomer up, buttercup. That can be all we needed to launch right up there. Maybe like, no way, JT, but look, that was a 3-wave correction. Very, very proportional. Almost classic. Yeah, like very, very proportional. Look at that. Almost a perfect echo. And if you look at it, that's a 1, 2, 3, 4, 5 up into the zone. And that little bar in my way. Right off of that. Pull this down right to the low because the bar's in the way. Need to pull it down. And what do we got? And we may rally right up to here. 54.47. So 54.30, probably a fair target. Now, if you so a week showing on this next pop is going to be 53.82. A fair price is 52.28, maybe as high as 52 or 54. Excuse me, 53.82, 54.28, 54.47, and this 5,500 may be the ticket right here. That may be the ticket, the golden ticket right there. Let's put a little golden ticket on there. Can we hit it? Is that going to be the ideal target? And it might be the top for a while. Like it could be the top for, if we do that, it could be the top for like 20 years. Maybe 30 years. Wouldn't that be crazy? Wouldn't that be rough? I mean, that's the kind of thing we're looking at right now. This could be a long-term top. That's what makes me so nervous right now. So that's sitting there on the chart. If this, so what do we got to do? Everybody wants to know, how do I know we're going higher? It all starts right here. We got to hold that 5-minute roadmap line. Got to do the next extension right up here, 52.73, then maybe extend it a little bit, then do another retrace and build this on up. So right now that's looking like 5 up off the lows. Getting the retrace, could go even bigger. This will build up. Then we'll go test the 15-minute. Load. There we go. That's up here at 52.80. Then we'll test the 30-minute. Up here, it should be about load. Oh, look at that. Perfect. Got it. Right on the money. Oh, look at that. It's PSX. So market open now. And opening a little red. Got the targets on the short side. Then we'll test the hourly, which should be about right there. Load. Yep, right there. Pretty good at this, huh? I can tell where the EMA is going to be pretty close. So right there, about 5,300. Then we'll go up to the 4-hour, which we're bouncing off of. That's a 4-hour bounce. Holding. Dun, 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 dun. Look at that extension right up in there. Look at that. That lines up perfectly with the other one too. So that may be where we stop, but ideal target up there at 5,500. Dun, 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 dun. maybe like, JT, what are the statistics on a 4-hour bounce? Be like, well, let's turn it on and look. Right there, 61%. 1 point. Yeah, nice profit factor. 61% of the time, once we cross this level right up here at 53.20, we'll cruise right on up here to 53.80. That's the odds going higher. Now, you may be tuning in and you're like, what the fudge is he even talking about ES? Like, what the heck is that? Never even heard of this before. That's the S&P 500 futures. All right. Why am I using the futures? Because they have data all night. All right. They have all the overnight data. Whereas if we go look at the SPX cash index and we're looking at this right here and like, where's that same pattern? It's not there, right? That doesn't even look the same because it's been closed overnight. So we gap down and we don't have that bottoming reversal thing quite the same way. But we did just go tag almost to 50 right there. Look at that right there. Look at that right there. Almost got it. And if we go over here and grab the price label and throw it off the bottom right there, 52.51. Kind of funny how this all works. Anyway. All right, moving on. Switch back to a day for S5FI. Coming on down. It missed the bottom. Now, if we're going on higher, this will probably cruise on back up. Possibly go hit this before we do that. Ultimately, I mean, it just depends on your time frame. Time frame, notwithstanding, we're going down here. Eventually, we're coming down here. Just a matter of time, right? That's the whole thing. As traders, now this is scary. This thing finished up the head and shoulders. Do we get a little bounce before we roll on down? I don't know. But now this is not a chart for doing patterns like this, but I can't ignore the fact that we've made this on this. This is a derivative since it's S&P 500 stocks above their 200-day moving average. This is not a tradable thing. This is an index. This is a measure of stocks. It's basically a giant market oscillator. If you've heard me say that before, I should turn off the trades because you can't trade this. This is probably going back down to the bottom. And if that head and shoulders plays out, we'll probably cruise right down here to the 40s. Right there on the S5TH. That one almost made it to the bottom. With the open this morning, we probably spiked it and we may reverse it. So these candles only update post-market and they're end of day only tickers. If you want the live ones, barchart.com, I think, has live reads for these. ES, we already been through. In Q, this one actually held up really well. Like it hit the upside target. It did the retrade. Like this is classic price action right here. Classic price action. Where we spiked the target. We retraced back to the support. Now what's the next thing that happens? Usually we go on an extension. That extension could be all the way up to 19,600-ish. Right up in here. Be conservative. Don't expect the line. So if you're new to fib lines and stuff like that, I often hold them as fuzzy zones like this, plus or minus 10% or so. And that's where this purple line comes in, and that's 90% of the way to the 1272. So very, I follow a pattern called the market roadmap pattern. That's what I named it. This is the market roadmap line. If you want that, links in the description. It's like $5, or you can go. I have a DIY option. If you go back and watch my videos, I give you the code and everything for free. But price tends to bounce off of this. It's fractal in nature, so it works on every time frame. So price tends to bounce off of this. Once price moves through the 618, it has like a 70. I've done a collection of 20,000 back tests right now in the current thing I'm working on, and 74% of the time on the daily chart, we go up and hit 90% of the way to the 1272. 74, better than 74% of the time so far. That's pretty strong. Like that's a high probability pattern. So if you find this thing, now this one right here did not hit the roadmap line. Didn't hit, so it's not a valid entry on this time frame. Now, it did hit on the 4-hour. It went down through it. So, but that's why I was looking at the ES right here. We did hit on the 4-hour right here. Like, that was a solid hit and hold. I'm curious on that one. Oh, blasted it out. Stop out. And so NQ possibly indicating we can go higher. Now, what could take us higher is NVIDIA becoming the biggest company in the land. This goes to 1250 or 1300. Could take us on up. You know, you're going up about 3.06, 3 point. It's probably at this point going to take it to be a $3.2 trillion company to make the top. And Microsoft's sitting at 3.15 trillion right now. NVIDIA down here at 2.38. It's got to add about $1 trillion to its market cap to get up there. Now, people are like, stock prices, blah, 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 blah. Yeah, it's about market cap, not about stock prices. All right. Stock prices are irrelevant numbers. Stock price times the number of shares equals your market cap right there. So when you come on here and you look at market capitalization, you got to look at the number of shares, which they're about to do a split right here, 10 for 1. So they're going to take their 2.4 billion shares, 2.46, and it's going to move the decimal over. So we're going to have 24.6 billion shares times whatever price and a split. They're going to divide it in 10 from what it is currently. To move the decimal over, it'll be 115 right now if you did it today. So I guarantee you in the next month, NVIDIA's stock price will be below $200 a share. Why? Because the split. You know, it's kind of funny. You know, it's not that NVIDIA's stock price is going to drop; it's that we're going to do a split. So, right there you have it. Right there you have it. Russell still looking quite bearish. Didn't make it back to the roadmap line yet. Is it on the path? That's a 1, 2, 3, 4, 5 down so far. We may do another retrace. Which, if we do another retrace right here from this level, hold that level right there. If we hold that level on a retrace, while the S&P and NASDAQ make higher highs, this is very not good. All right, that would be a setup for a massive decline. Massive, massive decline. We're talking about down here on the next move. We could do that would be a 1, 2, 3, 4. We could rally back up and then a 5. And then we do another nested retrace and then an even bigger flush out. And that could take us well into next year. So highly, highly, highly cautious on the Russell right now. If we hold below that 618 on any kind of rally, it's indicative of much, much worse things to go. Much worse things to go. 5250, that's what I got. And a spike down doesn't matter. Like if we're talking about the 5-minute chart, and 5250 was actually the level on ES, not the level on SPX. So SPX, the level's much further down than 5250. Dun, 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 dun. Yeah, it's a 3-wave down. Let's see. 1, 2, 3. Yeah, 5230 or 5232. That's where S&P can hold right there. So we may spike that level. Remember, futures prices and cash prices not the same. There's a difference. See, 5267, 5254, that's 17 point, 15, 16, 17 points difference. Why? Because futures are a contract for the future. Futures, get it? Future contract. These are June contracts currently. They'll expire in June, which is out here, and then we'll roll on to September. And you can see the forward contract pricing is actually looking for S&P to go on up into the 2030s. Optimistic forward curve. VIX actually has a optimistic forward curve. Oil has a somewhat bearish forward curve. Look at that. Oil expected to drop in the future. And the futures market doesn't always get it right. So anyway, oil jump back up. Look at the daily chart. And I got a lot of stuff drawn on here, and all the stuff I removed yesterday back again. Cool. Cool, cool, cool. So here we are. We've rejected that breakout yesterday, pulled back all the way back down. That's kind of funny. All the way back down. This could be the retrace we needed, because look, right here, that low, that high, right down in here. That's the 618 level. We hold that level and bounce. Things moving on me. Hold that level and bounce. That can take us on up quite a bit higher. How high, you might say? Use this fib tool, the extension, and that low, that high, that low. Yep, right in the zone. So this could be the retrace we need to propel us right up into that target right there. Right there. GC. I like prices of gold expected to climb over the future. Gold futures. Now look at that. GC. Nice rally. It was a spike reversal too. Look at this. This got gnarly. Look at this. This gap up. Retraced it back down. That was a gap up. It was only closed for like an hour. Futures closed for 1 hour. Look at that gap that occurred. That was a crazy gap. And futures don't usually gap like that. And then we retraced it almost back down. Now working on rallying up here. Potential breakout. Cruise on up. If we break above this box, odds are we're cruising on up probably 2,500 at the minimum. Probably 2,500. Definitely some volatile action there, though. I'm just curious. How's my buddy Silver doing? Oh, yeah. We break above these highs. Next stop, 35 on Silver. Right up there. Bitcoin. Boy, that was a flush yesterday too. Bitcoin, oddly enough, look at this. We see a lot of this happen where Bitcoin futures close and they're putting like selling pressure on. They're closed for 1 hour, and Bitcoin takes that opportunity in the spot market and tends to move big. So there's some kind of pressure that gets applied from the futures market. And when it's closed for that 1 hour, a lot of times we see this move. And this looks a lot like the gold move too. So I think it's interesting. But Bitcoin's still holding that downtrend of highs. If we can keep it going, we've kept it going so far, break back out above this high we made right over here on Monday the 20th. Break back out above that. It's game on for going higher. Probably going to hit this 77,000 target right up here. Ethereum looking a little more bearish on the lower time frames. The daily just parked right there. Haven't been able to make progress higher. Not really being soft. This may consolidate for 2 weeks because the spot ETFs got approved last week. May consolidate before we see any kind of price action go. Now, the Ethereum market is like 15% of the size of Bitcoin market. And I was having a conversation with my copywriter in the background yesterday that a lot of people just equate crypto to Bitcoin. Ethereum's not even in the conversation. They don't even know what that is. Only 15% of Americans, it seems like those of us in the know and in it kind of focused on the fact that everybody's got some crypto, right? Only 15% of Americans have any crypto or exposure to crypto at all. So that's pretty wild when you really think about it. And so it leaves a large chunk of the population, 85%, that haven't adopted any crypto yet. And what happens when we get closer to like cell phone adoption rates or internet adoption rates, right? We can see this thing way higher prices. So Ethereum may or may not hang out in that. And I just got tills on something for BITO. Cool. Dollar still consolidating on top of the roadmap line. No indication of where we're going. Higher, lower, I don't know. MSTR, nice rally. That may have been all it needs to rally right up here to 2100. I would be very cautious though. This could break down and return to the roadmap line. I don't like the fact that we came up shy of the roadmap line here, but I like it or not. We break above that 1740 price, probably heading up here to 2120. Burlington Coat Factory. Look at that baby go. Holy guacamole. Holy guacamole. That high, that low, right to the target. Didn't even give you an entry, just shot up there. That's one you would have had to gamble on. That was earnings play right there. And beat on the top, beat on the bottom. This is kind of like a story of haves and have-nots. Look at this. ANF yesterday. Holy guacamole, look at that candle. So, retail haves and retail have-nots. And like you go look at the Gap stores, not doing it so far. Didn't really hit the roadmap line there. And maybe they play catch up. But then you go look at something like JCP out of business, Macy's looking pretty horrible here. Not doing a big rally. Best Buy just kind of churning here at the bottom. So retail haves and have-nots. In fact, Best Buy was right there in the list as a popper. So SRPT just churning on the roadmap line. Nothing high probability. BIRK. Look at that. Birkenstock go. Holy moly. Let's readjust these lines just a hair. Target is probably right up here. Hadn't adjusted that in a while. Now this could, it's got like a 95% chance, since this was an IPO, that no matter what we do over here, some point in time, we're going to make a low lower than this line right here. Some point in time. And that could be the low, but usually we don't make the low that fast. And we usually start out in a corrective fashion, which this could lead to be a corrective fashion, and then we go make a lower low. So watch out for that in the future. OKTA, don't get too bullish long-term on BIRK for now. OKT bouncing, potentially going to do the bounce off the roadmap line. That would set us up for 117 once we get above this prior consolidation up there at 106. BBY. That might be, let's just clear this up. Might be the bounce right there. If we get the close up here above this 80 area, probably set for 88. That's a 10% gain just on shares. So that could be a pretty sweet one. Now, how long would that take on average? Let's check it out. 34 days, 34 trading days, not 34 calendar days. So it's actually closer to 2 months. It could take it. Let's see, 34 plus right out, 34 bars right there on average. Now it could take twice as long as that. So it could be like 78 bars. So it could take 113 days to go from here right up there. It could take 3 times longer, but there you go. That's kind of a, that's why I talk about shares on some of these. Shares are a viable option. Plenty of time, all right? You don't have to trade options. Don't have to do options. Options are dangerous. They add leverage and a bunch of other stuff. So PSTG, pure storage, retail haves and have-nots. That's, you could say that's services. I don't know. Storage, rental, launching off. Americans have so much garbage they're keeping in storage. mRNA. And that might come all the way back down. Watch out for the retrace off that. If we get below this high right here, it's probably going down to a lower low at this point. Probably going down to 51 at least. All right, coin. Watch out. We're right at resistance. That can lead to a bigger retrace, but it also can, if we get the close above it, probably going to rally right on up here to 294 area. SMFL. God, what a dumpster fire that is. Holy wow. Holy wow. Look at this. A reverse split, a reverse split, a reverse split, and another reverse split. That's going out of business, man. Woo, baby. That may be one of the best dumpster fires I've seen lately. Shit. I just realized my head was in the way for a bunch of the future stuff. Anyway. Wow. That's a piece of garbage. Foot Locker. Look at this. Look at this. The aggressive entry finally about to fire off. Conservative entry above 31. Possible targets up here. This was chart of the week from a few weeks back, I think. So watch out for target. Watch out for Foot Locker to get up to the target. AI. Hey, Logan. Hey, Rob. Goose in the house. C3 AI. Do kind of expect this to go down a bit further. This would be an ideal retrace here. That could have been the bottom. Came up a little shy of hitting the 50. Could be. I would watch for continuation lower there. This line doesn't really mean anything. It was just sketched out there. So if we break through, that could be okay. But as long as we're below this high, we're probably set the stage for going even lower. This right now may rally up to this 30 area in the short term, find some resistance, and then turn back down for that final move. DG, that's still looking pretty bearish. Look at that retrace underneath. Ugh, not showing strength on Dollar General. Tesla. Now, just because I'm expecting it to drop to the 160 may be the reason it just rallies out of here. So I would like to see it drop on down to the 160, make nice, clean price action here. But if we break above the daily roadmap line, game on for going higher. Although we still have this gap fill resistance. We haven't filled it yet. So we left this gap all the way back here in January. And we've just been messing around down here ever since. Consolidating here, I kind of expect one final flush out. But Tesla's out there beating the drums, getting investors. So we'll see what happens. LABU, that one's looking pretty bad. It's on the poppers list, but that's leverage and biotech, two of the things that I dislike. So be careful right there. Be careful. It's biotech and it's also leverage. AMD. One of my YouTube friends sent me this morning. They were like, "Look at this! If you sell a 390 strike, let's look at where this is. I think it was 390. No, three. I thought it was 320 strike. You can sell a 320 strike option, a put on AMD out to June, and you can collect $22,000, and it protects you to 165. Like, why would you even do that? Like, that doesn't even make any sense, like, right? Because it's hanging out at 165. You would have to be pretty bullish on that, and I don't think it's going to be that bullish. You might as well just buy shares there if you think it's going to do that. So, anyway, Dell, is that the top, or are we going to go cruising on up here to the 230 target? I don't know, but it wouldn't surprise me to go cruising on up. It's not high probability anything. MRUS hit the targets. Watch out for the retrace. NTAP hits, it just keeps hitting crazy targets. Oh, look at that, right to the level I drew back here. Funny enough, it happened. Funny enough. Sometimes I get lucky with those drawings. Sometimes. I didn't trade that, so don't matter. BWLP, just being nuts. Looks like a brand new one. CRM. Ouch. Made it to the roadmap line and then some. So they reported earnings last night after the close, and apparently whatever they said was not what the market wanted to hear. I mean, basically in line and in line. You could say it beat on the top, missed on the bottom. That's, to me, those, when you're that close, that's in line, pretty in line. But they didn't have any super awesome news, so big retrace. And looking at this, didn't bounce off the roadmap line, did hit the roadmap line. So this move up, retrace, extension. That was a corrective move up. Could set Salesforce up for the move down there. Yeah, that's a 50% retrace. Ooh. Man, that doesn't look good. Not good at all. I just want to know if I'm right at this point. Now, that doesn't look too good either. There's some cracks in the armor for the market. This could hold this zone right here. Starts getting below that 620 area though. Watch out below. That low, that high. We could see a move down to that support right there. 520. What? Waters Corporation getting slammed. That also does not look very good. Support right there. If we get below it, probably going on down here. NTNX. It's not a request show. And retrace there. ADBE. I do request shows Tuesdays at 5 p.m. So sit on your calendar if you want to do requests. The morning show, I'm just looking for what's popping and what's dropping. Stuff that's moving more than $2 is usually on the list. Otherwise, I don't really care. So I'm just looking for stuff moving today. And stuff moving more than $2 in the pre-market is what I'm usually looking for. So Adobe probably coming on down to the target here. New trade on AEM. That one right there, be that high, that low. Breaking above there, 69.50 target, FTI. Same situation, that high, that low. 26.45 be the target. BRKR, wow, ouch. How far down might that go? Well, it already hit the target on the downside, so possibly down to 62 is the next level. Support right there. KSS. Ouch. That's why you don't trade the choppy. Retail haves and have nots. Here's a Abercrombie Fitch doing awesome. KSS hitting the downside target. Look at that. Look at that. And that's a bunch of choppy stuff. Off of that right there, probably going down here. In that target path. There's another one. Probably heading on down to the bottom. Target down here on 8. Pull up the SAP that has data. And probably coming back to the roadmap line. Right there. MSFT. Oh, man. That has the pattern to hit 437, but it could be a double topper and come right down to the roadmap line again. ACN. That one's extending lower. That's a big 3-wave. Golly, man. Bad. Very much bad. All right, so that target for this one down here. SCCO. It's just crazy. Watch out for that to drop back to the roadmap line. Oracle. Usually on the decliners list, we find some good stuff somewhere that has touched support, but a lot of these not looking so hot. Oracle looks like it may turn down at the resistance. Watch for the drop down to this zone right here. AEO. Ah, look at that. American Eagle tapping on the roadmap line. Get back above this 24. This is what I'm talking about. That's a high probability pattern right there. Right there. Look at the statistics. 72% of the time. Not too shabby. IMVT looks like complete crap. It's a biotech. TECL. I don't filter the list before I come on. I just gather the list. And just shy of targets. Probably expect a little bit higher, 89, before it completely just rolls over. UDOW coming down to the roadmap line again. That's a double tap. That's what I was talking about for we might see on Microsoft right there. Might do that kind of price action where we come back down again. And AGQ. Yeah, that could be game on, like target. We get above this level right here at 52. It's game on for going much higher, 86 possibly. So silver could get nuts so crazy. That is leveraged silver, so be careful on leverage right there. But not too shabby. Not too shabby at all. All right, bias for the day is looking for this support to kind of hold here at 5250 area. And possibly down to 5237 on S&P cash here. Looking for a reversal. We may see a pretty swift reversal in here too. So watch out. This is building. It's building in the small time frames. As long as we can hold up in there. Now, if the futures start getting below this 5260 area right here, we're probably going on down. Probably going to go retest the 5250, if not get below it. So that's kind of your levels, 5250, 5260. And watch for a break above this. If we break above this consolidation here from yesterday, we're probably going on up. Probably make a new high. Watch that 5300 level right there. All right. Anything I said was helpful, beneficial, give me a like, give me a thumbs up. And I'll see you again tomorrow. Same bat time, same bat channel. Come see me. We'll talk about what's moving in the market, pre-market. And have a great day, everybody.